The headlines are full of all types of drama, everything from impeachment to Brexit to trade wars and tariffs, drone strikes in Saudi Arabia, Federal Reserve repo operations. Listen, I ignore all that noise and all that static, and I focus on market indicators. Market indicators are a whole lot harder to manipulate than news headlines are. So let me show you a couple charts that I think really are showing something unique here. I'll let you come up with a full interpretation of what it is, but let's first look at a chart of gold. You can see that gold has been moving up all year. It's been a very good investment, and it really started to pick up, though, midway through the year, around May or so. And I think that that comes back to what I've talked about in the past with the price of silver and how in 2016, in the summer of 2016, after the surprise Brexit vote, we saw a lot of uncertainty. The prices of precious metals really escalated, particularly silver. Silver got up to around $20, $21 an ounce. Once all that uncertainty went away, the price of silver collapsed. Well, I think we're seeing a very similar thing play out right now. Price of silver only about $18 an ounce, so it hasn't made it all the way up to the 2016 peak. But for now, Brexit is scheduled to get some type of resolution by October 31st. We have the trade negotiations with the Chinese taking place mid-October. There's a lot going on in this upcoming month. And I think some of the uncertainty might just be coming out of the marketplace, even though you see such major critical headlines. Look at this chart of gold. It looks like it perhaps has have a double top. And I think what is more important than the possible double top is if you overlay a chart of Bitcoin with gold. Notice how Bitcoin had already peaked a couple months ago. It's come down drastically in the past few days. And I wonder if this is a harbinger of a little bit more stability coming into the marketplace. And since gold and Bitcoin have tended to be fairly correlated throughout the year, you might see a further decrease in the price of gold. Now, to me, why that's so important as a market indicator and much more important than what we hear in the headlines is that gold and the S&P 500 tend to have a negative correlation. When gold goes up, you can see that the S&P 500 goes down. And so what this may be indicating, and what I'm certainly going to be looking at in the future weeks and as we go out to close out 2019, is that if earnings continue to hold up and if things don't get any worse, perhaps Brexit either gets resolved or the can gets kicked down the road more, Trump either does or doesn't get impeached. I don't think that's really an issue one way or the other. Whether the Chinese trade deal is taken care of now or whether it becomes an election item for 2020, I think, again, that's all static. If the price of gold starts to move down, we may, in fact, see this S&P 500 move on to do a Santa Claus rally and close up well above 3,000, maybe even 3,100. It all depends on where fourth quarter profits come in and where 2020 estimates are. Right now, I think we can easily put a 17 or an 18 times on those earnings, and so 3,100 is really not out of the question. Now, is that going to take place? I have no idea. I'm going to be watching it closely, and do come back for future episodes. We'll see how it all works out. Until then, as always, this is John Pugliano wishing you the very best returns.